Learn to Trade the Stock Market, Part 31. The effects of news on stock prices can vary depending on whether the news has short-term or long-term implications. Short-term news typically refers to information that is expected to have an immediate impact on stock prices, such as earnings report or company announcements. For example, a positive earnings report can lead to a surge in the stock price, while a negative earnings report can cause a sharp decline in the stock price. On the other hand, long-term news usually refers to information that is expected to have a lasting impact on the stock, such as changes in market trends, technological advancements, or shifts in consumer behavior. For example, a company announcing a major strategic shift or a new product launch could have long-term effects on the stock price. Short-term news typically has immediate effects on stock prices, while long-term news can have a sustained impact over a longer period of time. As a result, traders and investors need to consider both short-term and long-term news when making investment decisions, as each can provide valuable insights into market trends and potential opportunities. Learn to Trade the Stock Market, Part 32. To stay up to date with the latest news, stock market traders can use a variety of sources. One common approach is to follow financial news websites like CNN or Bloomberg. These sites offer detailed analysis on the impact of news on stock prices. Social media platforms can also be a valuable source of real-time news and market updates. Traders can follow relevant accounts and hashtags on platforms like Twitter or LinkedIn to stay informed on breaking news, earnings reports, and other events that could impact stock prices. Lastly, many trading platforms such as 2TradeAsia.com provide access to news and research materials, including real-time news feeds, market analysis, and earnings reports. Stock market traders need to stay updated on the latest news to help them make informed investment decisions and take advantage of potential trading opportunities. Learn to Trade the Stock Market, Part 33. For today, we have a story time. Warren Buffett is one of the world's most successful investors. He began his career as an investor in the early 1950s, and over the next few decades, he built a reputation as one of the best investors in the world. One of the keys to Buffett's success was his ability to compound his investments over time. By reinvesting the dividends and capital gains from his investments back into the companies, he was able to benefit from the power of compounding. For example, one of Buffett's most successful investments was in Coca-Cola. He began buying shares of the company in the late 1980s and continued to add to his position over the years. By the early 2000s, his stake in Coca-Cola was worth billions of dollars, and he had earned a substantial return on his investment through both capital appreciation and dividends. Buffett's success is a testament to the power of compounding. By reinvesting his earnings back into the market, he was able to turn his initial investments into much larger sums of money over time. This is a strategy that can work for anyone, whether you're a seasoned investor or just starting out. The key is to invest in quality companies with strong competitive advantages and to have the patience and discipline to hold those investments for the long term. Learn to Trade the Stock Market, Part 34. Here's another story time. Charlie Munger is another example of someone who became rich through the stock market. He is the vice president of Berkshire Hathaway and Warren Buffett's longtime business partner. Munger began his career as a lawyer, but he soon became interested in investing and began to study the works of Benjamin Graham. In the early 1960s, Munger started investing in the stock market and quickly developed a reputation as a skilled investor. Munger's investment philosophy is similar to Buffett's, with a focus on buying high-quality companies at reasonable prices and holding them for the long term. He is also known for his emphasis on the importance of continuous learning and intellectual curiosity. Through his investments in Berkshire Hathaway and other companies, Munger has accumulated a significant fortune. He has consistently reinvested his earnings into new investments, taking advantage of the power of compounding to grow his wealth over time. Like Buffett, Munger is a strong advocate for the power of compounding and the importance of investing for the long term. His success as an investor is a testament to the power of discipline, patience, and a long term perspective in the stock market. Learn to trade the stock market, part 35. Compounding is a powerful concept that can have significant benefits for stock traders and investors. Compounding refers to the ability of an asset's returns to generate additional earnings over time. To illustrate the power of compounding in stock trading, consider an investor who invests 10,000 pesos in a stock that generates an annual return of 10%. After the first year, the investor would have earned 1,000 pesos in returns, bringing their total investment to 11,000 pesos. If the investor reinvests their returns and continues to earn a 10% annual return, their investment would grow to almost 15,000 pesos after 5 years, around 38,000 pesos after 10 years, and almost 160,000 pesos after 20 years. Not bad for a small investment of just 10,000 pesos. Now imagine if you regularly invested more. The power of compounding can grow your money to millions. By reinvesting returns and earning additional returns on those earnings, investors can grow their portfolios at an accelerated rate. This can be especially powerful in the stock market, where even small differences in returns can compound over time to result in significant gains. Learn to trade the stock market, part 36. The stock market is a good long-term investment, especially if you're building your retirement fund. To illustrate, if you invested 10,000 pesos and bought Jollibee shares in April 2008 or 15 years ago, today in April 2023, your investment is now worth around 50,000 pesos. If you bought JG Summit Holdings, the conglomerate company of Robinsons Land, Cebu Pacific, and the rest of the Gokongwei Group, then your 10,000 peso investment is now worth around 55,000 pesos. Or if you bought shares of the real estate company DMCI, your 10,000 peso investment 15 years ago would be worth around 94,000 pesos today. That's just a one-time 10,000 peso investment. If you invested regularly on good Philippine companies over the years, then you probably have millions of pesos today. But it's not too late. You can start investing for the long term now and secure a comfortable retirement in the future. Learn to trade the stock market, part 37. Stock trading, also known as active trading, involves the frequent buying and selling of stocks in an attempt to make a profit from short-term fluctuations in the market. Stock trading has the potential for high returns. You can make significant profits in a short period of time. Stock trading also requires a deep understanding of the market and the ability to make quick decisions. Thus, it helps to develop your financial knowledge and analytical skills. However, active trading is inherently risky because the stock market can be unpredictable and volatile. There is a high chance you could lose money if you make a mistake. It is also time-consuming as you need to constantly monitor the market and keep up with news and events that may impact the stock prices. And stock trading can be highly emotional, as you may be tempted to make impulsive decisions based on fear, greed, or other emotions, rather than objective analysis. In summary, while stock trading can be potentially lucrative, it requires a significant time commitment, a deep understanding of the market, and a willingness to take on high levels of risk. It is important to weigh the potential benefits against the risks and drawbacks before deciding to engage in active trading. Learn to trade the stock market, part 38. Stock investing involves buying stocks with the goal of holding them for the long term, usually with the expectation of earning a profit as the company grows and the stock price appreciates. Historically, stocks have provided higher returns than other asset classes over the long term. Investing in stocks can help build wealth and provide a reliable source of passive income. Also, compared to active trading, stock investing involves fewer transactions, resulting in lower brokerage fees and taxes. Plus, investing early and consistently can take advantage of the power of compound interest, where earnings are reinvested, leading to exponential growth over time. However, successful stock investing requires patience and a long-term commitment to holding stocks, which can be difficult for some people. Moreover, it can be difficult to predict the future performance of individual companies or the market as a whole, leading to uncertainty on your returns. In summary, stock investing can be a powerful tool for building long-term wealth, but it requires a patient, long-term perspective and an acceptance of market volatility and uncertainty. It is important to research and diversify investments to reduce risk and maximize potential returns. Learn to Trade the Stock Market Part 39. Fundamental analysis is a method of analyzing the intrinsic value of a stock by examining financial and economic data, such as revenue, earnings, assets, and liabilities. Fundamental analysis can help you identify stocks that are undervalued or overvalued based on their intrinsic value, which can help you make informed investment decisions. By studying financial statements, it can also provide a long-term perspective on a company's potential and overall financial health. Furthermore, it can help you identify trends which can be useful in predicting future earnings and growth of a company. And by analyzing multiple companies with the same industry, fundamental analysis can provide a basis for comparison, allowing you to make informed decisions about which stocks to invest in. However, conducting fundamental analysis can be time-consuming and it does not take into account market sentiment, which can have a significant impact on the value of a stock. Also, fundamental analysis may not be applicable to all types of companies, particularly those that are not yet profitable or have limited financial data available. In conclusion, while fundamental analysis can provide a useful framework for evaluating the intrinsic value of a stock, it should be used in conjunction with other analytical methods and factors, such as technical analysis and market sentiment, to make informed investment decisions. Learn to Trade the Stock Market Part 40. Technical analysis is a method of evaluating stocks by analyzing statistical trends and chart patterns, such as moving averages, support and resistance levels, and trading volumes. Technical analysis can help you identify trends in the movement of a stock's price, which can be useful in predicting future price movements and determining when to buy or sell. It can also provide clear entry and exit points for a stock, which can be useful for stock traders. Furthermore, technical analysis can be used to evaluate stocks, bonds, currencies, and other financial instruments, making it a versatile analytical tool. However, technical analysis relies on historical price data, which may not accurately reflect future price movements, resulting in false signals and wrong investment decisions. Plus, it is subjective and can be interpreted in different ways by different people, which can lead to conflicting trading or investment decisions. In conclusion, while technical analysis can provide useful insights into a stock's price movements, it should be used in conjunction with other analytical methods and factors, such as fundamental analysis and market sentiment, to make informed investment decisions. Learn to Trade the Stock Market Part 41. Where do you trade stocks? You need a trading platform that's provided by stockbrokers. And one platform that I recommend is 2Trade Asia Plus. This new trading platform from 2TradeAsia.com is easy to navigate with an all-in-one dashboard so you can see everything on a single screen. It also has a one cancel other conditional order that allows you to strategize your trades and mitigate risks. There are also screeners that show a lot of data analytics that experienced traders will love. For beginners, there is the thematic baskets that can serve as guide on which company to buy and invest in. 2Trade Asia Plus works on both mobile devices and desktop computers. There's even day and night themes for your preferred and easier viewing. These are just some of the features of 2Trade Asia Plus, and more functionalities are coming soon. Learn to Trade the Stock Market Part 42. How do you choose which company to buy in the stock market? You can use the 1D strategy, which stands for operations, net income, expansion, and dividends. Let's do a simple analysis of Ayala Land or ALI. They have good operations as Ayala malls are nice and Ayala Land condominiums are well maintained. Net income is excellent because it has been consistently positive. They made money even during the pandemic years. Then you can look at their company reports and see that they have a lot of plans for growth and expansion. And lastly, Ayala Land also gives out dividends every now and then. Therefore, if you're looking for a good long-term stock market investment, then Ayala Land or ALI is an excellent choice as based from the 1D strategy. Learn to trade the stock market, part 43. How do you choose which company to buy in the stock market? You can use the 1D strategy, which stands for operations, net income, expansion, and dividends. Let's do a simple analysis of Dito CME Holdings or Dito. I'm not impressed with their operations because I don't even know anyone who has a Dito SIM card. Their net income has been negative every year since 2017. While they have plans for growth and expansion, they're more currently focused on looking for the money to fund that expansion. And lastly, Dito has never given out cash dividends. Therefore, if you're looking for a long-term stock market investment, then you might want to avoid Dito as based from the 1D strategy. Learn to trade the stock market, part 44. How do you choose which company to buy in the stock market? You can use the 1D strategy, which stands for operations, net income, expansion, and dividends. Let's do a simple analysis of ABS-CBN Corporation or ABS. I'm impressed with their operations. Despite losing their franchise, they were able to quickly transition to other ways to distribute their shows. However, ABS has been losing money since 2019. Their net income has been negative for the past 4 years. But on the other hand, ABS continues to grow and has recently announced that they're planning to expand in India and partner with more streaming platforms. Lastly, ABS-CBN used to give out annual dividends but has stopped since 2019. Now, the question is ABS-CBN a good long-term stock market investment based from the 1D strategy? What do you think? Let me know your thoughts in the comments. Learn to trade the stock market, part 45. How do you choose which company to buy in the stock market? Well, why not let the experts choose for you, right? Fortunately, you can do that with thematic baskets, the easiest and most cost-effective way to diversify your stock investments that's exclusively available in 2Trade Asia Plus. Thematic baskets are a group of companies that have good income potential as determined by the expert researchers at 2TradeAsia.com. The companies included in the thematic baskets have high market value, but their stock prices are currently cheap. They also tend to give out huge dividends, plus all of them are sound and stable companies with good growth prospects. Lastly, there are many baskets that you can choose from. There's one that's a mini index tracker, one that's focused on companies engaged in travel and tourism, another one that's focused on companies involved in clean energy and renewables, and a lot more. If you're too busy to do your own research, then thematic baskets is a good way to select the companies you can invest on in the stock market.